Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's April 26th. This will be our chart lesson for the day. And as you can see, this is our daily chart with the envelope bands on here. But you can see we're pretty much already testing those lows. 2 days. I mean, we've dropped. I mean, prices are around 41.40 now, and just a couple of days ago they were at 4,500 or so. So it's a huge drop there in just a couple of days. But as you know, as we talked about this possibility we were going to test these lows. Well, I didn't think it would happen this quick, but we're already testing these lows. So as you can see, the last few trading days have been pretty volatile. So we're starting to see the big bars and the volatility again. And um, I don't know if we're going to bounce out of here or what's going to happen. It's just hard to say. But we did have a channel coming down here, and we've had the break, and now we're having a retest. So maybe we're about to see the end of this selling. We could just be seeing the start, but the way this is setting up, maybe we're going to find the bottom here finally. We'll just have to see. I think we're overdone for the selling for a while, but you just never know in trading. Markets can get way oversold or way overbought, much more than you would expect. But you can see this entire contract was fairly normal until this first sell-off, and then this next this is really still part of the same sell-off here, and then this correction was a little bit overdone, and now we're way overdone again. So we'll just have to see where it goes. But I did want to show you this. This was a classic trap. They took prices higher on this bullish bar, and suddenly it turned and the bottom fell out of it. And that's a classic trap right there. Uh, Anybody that loaded up on this bar or on this when prices broke higher found out quickly they were on the wrong side of this thing, and you can see what happened here. The huge sell-off. I mean, it's a very bearish day. When we flip over to the chart, you'll see what it looks like on the 2000 tick. Of course, you've probably already seen it, but anyway, let's flip over there and go through the trades and wrap this down. All right, real quickly before we get to this chart and the trades, I am going to be taking off Wednesday, Thursday, and Friday. I'm taking a trip here, so I'll be gone those days. So I'll probably come in for a few minutes in the morning. I'm hoping to, and if so, I will do a mid-morning chart. So you'll probably get that, but no chart lesson Wednesday or Thursday this week. So, but I'll be back Monday, this coming Monday. We'll be back to back on our regular schedule, but I'll be gone all day Thursday and Friday and most of tomorrow. So it just depends. I'm going to, like I said, I'm going to try to come in for a couple hours in the morning. And if so, I will put up the mid-morning chart. But if you don't see one, you'll know why. And again, no chart lessons after today until Monday. So anyway, let's get to the trades here. Actually, let's just talk about the chart in general. You can see we traded down real sharply, and we had that break and new low here. But as I talked about in the mid-morning update, when you get a sell-off that strong, generally a break and a new low just leads to a new trend that's a little flatter or whatever. And you can see that here. It actually tried to accelerate before we bounced, and we just went into this yellow channel. So it's like a spiking channel down, basically, is what you have here on the daily chart. So quite a few really good trades here, and you can see there's no buys at all. It's all sells today. And there's a few green ones in there. And like I said, when you get days like this, there's always some other green ones you could argue for. But there's so many good setups here that, there's just no sense in being too risky on a day like this. Just wait for the prices to come back to a key entry point and give you a setup and take it. That's kind of how you should be trading. And don't try to buy a day like this. It'll get me. People will come in here and they'll try to buy these rallies and, buy in here, and then they wonder why they lose. Just don't try to buy on a strong downtrend day like this. Wait until you got a confirmed trend working in the other direction before you try to buy anything. So I don't see anything here at all today that I would be interested in buying. It's just too bearish. So anyway, let's zoom in, go through the trades, and we'll wrap today up. All right, 7 o'clock came right in here as we're topping out here, and notice you got a triple test there. You also have a second entry short. The signal bar is just a little bit iffy, but my opinion is, I mean, this is borderline being red. My opinion is because it's a triple test as well as a first entry, second entry, that you could probably safely take this trade. However, it's a little bit congested and it's not a perfect signal bar. I think it probably does close in this lower 1/3, but it just really depends on how aggressive you want to be. But you might could argue for this to be red. I mean, it's borderline, but I just wanted, because of the congestion, I felt it was probably better to mark this one green. I like the trade personally, but that's where I stand on that one. So, and then we just chop lower here. We drop and go sideways and drop and go sideways. And I just don't see any setups in here that I think are worth taking, because you got to go short right into the support each time till finally you get this little congestion right here and you get a failed breakout. It turns down really right off the key entry point and a big bearish bar. So as long as you got room to get out, take that trade. There's a lower high here. I did not mark it. It's like a little breakout pullback short. It's just so close to the very low of the day that it's just hard to justify taking that trade. You could easily get burned there, and so I didn't mark it. But if you're patient, in a few minutes, prices come back here, and note that you get this little congestion, so it's really like a failed breakout. I marked this one green because it's a first entry, but it's just another big bearish bar right at the key entry point in a very bearish day. So it's a trade you may take. You're almost always better off to wait on a second entry or a lower high, and you just don't really get a good setup on the lower high because prices have moved a little bit too far to consider that a lower high. And at this point, I'd want a second entry, and we just don't get it. We drop on down. But again, just a few minutes later, we trade up, and you got this channel. You get the close outside, and you get a triple test right there with a big bearish bar. Very nicely bearish bar. I like going short there. So again, that's just a triple test across there. Notice we made that high. Plus you've got a break or a close outside and a new high, and that's the first break of the main trend line. So a trend that strong, you're almost guaranteed that you're going to test the lows. The question is timing, and so you need a good setup. But a triple test that far away from the EMA with enough room to scalp out, I'm probably going to take that every time. So price is just, the bottom just falls out of it there. And then we're just kind of down in here, we're just kind of chopping around. You finally get this, there's a little bit of a channel working up here. I didn't draw this on. Let me put this on here. There's a channel working up. It's sideways too, but here we're trending up. And you get the close outside and the new high, and then you try to go higher once, and then you try to go higher twice. And just with the size of that bearish bar, it's almost worth, it's worth risking that on a failed second entry long, because I guarantee you they trapped the longs when this next bullish bar went higher there. And you can see how quickly that drops and how that gap shoots across there. That tells you got people trapped. And I don't see any other entries. And then we're bouncing here, but again, don't try to buy these kind of days. I didn't mark this one. You really don't have your trend line here yet. You do have a close and a new high. But I think you need to wait on a lower high, which comes here, and there's no setup. But then you get another failure, and it looks very similar to this one. It's like a repeat pattern, so I really like that one. I marked it green again because it is a little congested. But if you notice the repeat pattern here, you could pretty much mark that one red. So it's another one of those borderline ones. You could consider it. And of course, we drop down, and notice how we don't get down here to this trend line, even though you got this green channel here, a new channel. Notice how you don't get down here and you bounce a few times and then you're heading higher again. That's a good sign that prices are you're going to get a close outside your trend line. So don't try buying this stuff, even though you know prices are going to go higher. Just wait. And then of course, again, I don't have there's a trend channel working up here. And you get an overshoot, but you get a break and then a new high, and then you get a lower high, which is still above the EMA, a little risky. But then when you get the failure and that big bearish bar, just go short there. And if you don't like that one, you wait a few minutes and you get another triple test here. Notice 1, 2, 3, and notice how bearish that bar is. Another great place, another good place to go short there. And then you actually get a reversal here. I marked this one green because you already had a break and a new low, but it's still a first entry, second entry. So if you like, if you're more experienced and you can trade reversals and traps like that, failures, especially with that bearish bar, you may take that trade. So, and of course, we bounce out of there again, turn back down. I don't see anything here that be worth risking. Then we're bounced and going higher. And it's really tempting to go long here. I don't see anything that I think's worth trading. This looks like a double bottom. So all you have is a first entry there, and then it goes higher. Your second entry is way up here. So your failure is way up here, and it's just too far to be trading a failure, too far away from the EMA. And so you just don't get much of a chance there. There is a lower high here, but it's right back into the trend line. That one's really tempting, and it would have worked, but you can get burned on that one, so don't take it. Then your failure comes here, but it's congested above the EMA. So not really a great place, but if you get to looking here, this is just sideways. So this looks like one leg, first entry, second leg. So in my opinion, this is where the failure occurred. So you could go short one tick below the red bar. Your safety stop this is actually your signal bar, the green one. But this is where prices broke lower, so that's where the failure occurred after two legs down. And doesn't go much further, but it's enough to get you your scalp, and then prices are bouncing. So you do still come back and make your new high here. Notice this channel working up, you get your break, couple legs up to a new high, and then you make a lower high, and that pretty much confirms that trend line too, that yellow trend channel. Really, you confirmed it here, but I'd wait on a lower high on this, and that comes here, and it gives you another confirmation of that trend channel line. So plenty of room back to the EMA. And you could also look at this as a new high. So a first entry, second entry, it breaks higher and traps. I mean, there's you another failed second entry long. You could trade this as an engulfing bar. I think I would wait on this one and wait till this bar closed, just simply because that is very congested across there. But if you understand why, it's because we're in a downtrend and there's some buying coming in. People are trying to pick bottoms, but you can see there's no rejection there. People are buying these bottoms across here, hoping that they've caught a low, but notice there's just no rejection. You're just going sideways. That's not a good sign. So when you get that trap right there, that's a good place to go short. Of course, it drops. And again, don't be trying to buy this. You just need good short setups, and I don't see anything in there really that interests me, especially when we haven't got back down to the lows yet, and we're trying to rally out of there. So that's a concern. It's a lot of sideways stuff, and but finally you come up here and you get a triple test across here. You made that high, you test it once, you test it twice. You really had already tested it 3 times here, but there's no break of this trend channel working up. So, but once we got the break and another test of it, then you could say, hey, we got a triple test. I like going short there. There's plenty of room back to the EMA. That's the better place to enter. Of course, you get the first break of this 2-tiered channel, and you run up to a new high, and then you're going lower again. And notice you're working up here. It's really tempting to go short right there off that key entry point. And you probably could make the argument that it'd be green. I told you there's probably some more in here that you could make that argument, but you're better off to wait on the lower high, which came here. And notice how it broke higher and turned down. I don't think I would trade that on an engulfing bar because it could always snap back and close above the EMA. But when it closes above, if you get a break below that, you're probably going to get your scalp, and maybe we're headed to the other side. And so you can see you would have got a lot more than scalp out of that. And there is a reversal pattern here, but it's right at the key entry point, but it doesn't quite get back to the EMA and that's where we like to see it. But once again, it's close, so you could argue for it. It's getting late in the day, so I hate to be, if you're going to be aggressive, you want to do it in the morning, not late in the evening, because in the morning you got time to make it back if you make a mistake. When you trade this late in the day and you make a mistake, you don't have much time to make it back. And so it's real. And for whatever reason, too, I found that before maybe 10 or 11 o'clock, the price action is more stable and it tends to follow through more than it does in the afternoon. That's not 100%, but just on a general, after trading this thing for years, I've seen that a lot. So I just prefer to be done. I like to get my trading done in the morning and be out of here by 10, 11, 12 at the very latest. So, of course, I'm usually not out of here because I'm working on this other stuff. But one of these days, that's probably all I'll do. And I'll be out of here by 10 or 11. I'm not quite there yet. So I still got a daughter in college, and I got to get her through college. So I still going to be here. So anyway, you get your break here, and you just get a first entry and a second entry. This one looks a little congested, but that when it broke higher there and failed and turned down, I think that's well worth the risk because you're not back down to these lows yet. And that's a fairly strong move right there. So, and I don't see anything else in here before 2:30. It just kind of starts going sideways. So don't risk that. There is a little, you could say, hey, there's a new high and then a first entry, second entry. And this is not far into 2:30. What time is it? 2:31. So if you took that trade right there, I could live with it. I'd probably mark it green because it's so late in the day. But there's definitely a failed second entry long and a trap. And you're expecting prices to come down to this side of the channel. And you can see it went straight to it before they bounced. And then even though it bounced there, the market's still weak. We end up even trading outside of that and closing down here basically almost on the very low of the day. I mean, very bearish day. Just nothing good about this day if you're bullish. So, but I mean, as day traders, I've said this many times, we don't care. All we need is movement. We don't care which way the market goes. However, I prefer for it to go up because I have other long-term investments and for the economy and all that. I just prefer the market be going up rather than, I'd a lot rather be buying a strong rally than selling a huge sell-off. Either one will make us money, but longer term for the economy's health and everybody's retirements and things like that, I prefer to see it go up. So, but again, as day traders, all we care about is movement. So when it's down, sometimes the best trading days are down days like this because some of these moves will just go and go and go. So there's several runners in here today that would have netted you a nice runner. And you only need one or two of those a week, really good ones, to really change your numbers. So, I get people that'll say I'm at 70%, but I can't get past break even, and they're only trading singles. Well, if you can get to break even trading singles, believe it or not, you're probably a pretty good trader because there's a lot of people that love to be at break even. So it means you're close, but you probably need to get to a point where you can trade the runners before you'll really start to see the improvement in your bottom line. Because a single runner, just think of it like this. Let's say you get a 10-point runner and you're trading singles. Well, guess what? That's 10 points worth of losses that you just made up in one trade. And that really changes your math. And so that's the point you need to get to at some point. Believe me though, I tell you this, you can make a living at this just scalping 4 ticks. But you got to be good. You got to get to the 80% or higher. And that's not unachievable at all, only trying to get 4 ticks if you learn how to read this chart and you can be disciplined and follow the rules. You could trade singles and make a living at this, but you've got to be good at it. You got to be a really good chart reader, and you got to be very disciplined, and you can't make mistakes. And even good traders make mistakes occasionally. I make mistakes more often than I would like. But usually when I do have a loser, it's just a dumb mistake from getting overconfident or just sitting there for a long time and getting antsy and saying, okay, this may be the best I'm going to get today. And then I take the trade and find out I'm one swing early, and then there comes the big move. I'm like, you idiot, why did you do that? You knew better. But that's what happens in trading. So much of what we do here is mental. So you got to maintain that mental edge, and you got to maintain and be disciplined. So That's just as important as learning how to read the chart. I know some people that are very good chart readers, but they're not very disciplined and they don't have a lot of success, but they can read this chart upside and down. And that's the first step, is learning to read the chart. But then you got to work on that mental aspect. So never forget how important the psychological part of this business is. I liken this. If you've ever played golf, trading has a lot of a lot of similarities to playing golf. I mean, you can be a really good golfer, but if you're off your mental game that day, your golf game can go to pot in a second. And trading's the same way. I mean, just as an example, if you know much about golf or follow golf, Tiger Woods at one time was the best golfer in the world, and then he had all these personal issues in his life, and suddenly he couldn't even make the cut a few times. So you don't just forget how to play golf. So it just shows you how important the mental aspect of that game is, and it's just very similar in trading. If you come to work in the morning to trade and you've got personal issues and things distracting you, or you had a bad day or a bad night before, don't trade that day. Just put it aside and get past your issues and then come back, because I promise you those personal issues will manifest in your trading. And that's what happens to us. And then once you have a loser, you get mad and then you try to get back at the market. Those are all classical things that weak traders do, and why they don't succeed. And so you got to learn to get past that. You got to learn to say, okay, I'm not trading today, or okay, there's no setups. I got to wait another hour if I have to. And there are some days where you wait an hour or two before you get a setup. And that's hard for most people to do. Most amateurs are looking for a trade on every swing. Me, I'm looking for a trade to happen at these certain spots, and I'm waiting on prices to get back there. And when they do, I take the trade. But I'm not looking for a trade on every swing. And that's the difference between profitability and non-profitability, is being patient and waiting on the trades to come to you rather than searching out a trade on every swing. I mean, I can see there's no way you would ever want to take this many trades in a day. These are just the trades that manifested themselves based on our strategy, and you only need one or two of these. So if you could just sit here until you can see one or two of the easiest of these trades every day, you can make a nice living at this. But if you come in here and you start trying to force a trade all the way down, you'll end up selling right where it bounces and stop you out, and then you'll watch it go right where you thought it was going to go without you. Don't be that guy. Wait patiently for prices to come back to these. I mean, look where every big move came from. You had a pretty good move there. You had a pretty good move there. Another one there. You had one there. Really good move there. Really good move there. Now, where did all those good moves come from? Right off these key entry points. These trend lines are the key entry points. Key entry points are only important support and resistance. Or here, you had the triple test. Here, you had the triple test. And that's what I'm talking about, those key entry points. So when you get set up at a key entry point, that's the one you want to take. Otherwise, just let prices go. Be patient. Be a predator. Don't be the crazy guy running around with a club trying to club everything that comes along. Hide in the bushes and wait. And be that predator, and when that good setup presents itself, jump all over it. But anyway, I'm going to wrap it up. Again, this could be, or this will be the last chart lesson this week. No chart lesson tomorrow. I may do a mid-morning chart. I'm just not sure yet. But this is it for the week. Hope y'all have a great week. Good luck with the rest of the week, especially if it continues to move like this. I'm hoping. Usually when I take vacation, I don't even look at the market because I just don't want to distract myself with it, and then it makes me want to be there trading if it's a good day. So usually I don't even see what happens until I come back, and I've learned to do that. Just when you take a vacation, put this stuff aside and take a vacation and get that mental break, because it'll help you with that psychological mental aspect that I just went through. So anyway, I'm going to wrap it up. We'll be back again. It'll be Monday before you'll see me again on the chart lessons. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.